Welcome back to another episode of the Good Question podcast by CoinSchedule TV.
So I just finished the podcast with Tassos Repakis, the head of legal at CoinSchedule. We had a very interesting conversation about ICOs, STOs, securities, and in particular we themed the podcast around the question, are STOs better than ICOs? Of course the answer to this is not very clear cut and there's lots of nuances in the answer, but it's a very interesting discussion between the two of us. And later on in the podcast, we go on to discuss ETFs, the significance of ETFs, and the legal ramifications of them all. Don't forget to subscribe, like this video, and share it with your friends. I hope you enjoy. So just jumping straight in, I want to know in a legal term, what is an ICO?
In a legal term, okay. An ICO is a crowdfunding scheme. That's what it is. Now, there isn't a legal definition that applies specifically in the UK because we don't have ICO-specific regulations yet. It hasn't been defined by Parliament. Neither the European Union has introduced anything just yet. They are in the process, but we don't have something just yet. From a legal point of view, in the United States, it's a security. It's a security offering. Mm-hmm. That's what it is. In Malta, it isn't. It's a virtual asset offering. It depends on the jurisdiction. For me, it's a way to raise capital, quite efficient, pretty mature, if you ask me personally. It's quite simple. You have an idea, you need money to back it up, so you put together a white paper that decides the functionalities of the coin or the token that you will issue in order to raise those funds, distribute that, sell that in order to raise the funds that you want, and float it on the blockchain and hope for a better future.
So you just mentioned that in the United States, ICOs are a security.
Yes. Initially, the approach was that since there was no definition of what an ICO is, the United States, the regulators believed that it should be treated as a security. So initially the courts applied what is widely known as the Howey test.
Before we jump into that, Can you just define a security?
Define a security. A security is a title of ownership over a contract or a contractual relationship between two parties. So it's something, you can, let's say, create a title that gives you ownership over rights and obligations that are in a contract. That's very rough definition of what it is. It's not a strict legal definition, but it's something that I think is understandable. That's what a security more or less is. So securities, because they carry risk for people that invest in those rights and those interests by purchasing such titles. The regulators wanted to ensure that those titles don't lose their value just because the underlying contract was not performed or there was any, let's say, bad faith in its performance or whatever. So they have been around for quite some time and they are heavily regulated. So this burdened significantly startups that wanted to raise funds. It made funds for them less accessible. That's why the ICO came up as a concept. It was a very easy way, unregulated. People didn't have to worry about all the regulatory burden they need to carry in order to launch an ICO, if it was a security that would carry. That's mainly what it is.
Okay, and do you think that now that the SEC's called ICOs securities, that's going to stifle the development of ICOs?
Actually, it didn't, because the SEC had started that before the peak of the ICO market. Mm-hmm. So the ICO market now is experiencing a decline. But the SEC tried, let's say, to put some checks and balances on this process, but they didn't actually manage to do that because globally the ICOs were very successful, and US issuers find ways to go around it. So although there is now a court decision that treated ICOs as securities, and now they have provided like a blanket, let's say, it was a blanket approach. Every single ICO should be treated as a security. It was the only way for the US market to put ICOs within this, under the umbrella of the regulatory framework that currently exists, without having to propose new regulations that are specific for ICOs. That's what really happened there.
And do you think ICOs should be classified as securities?
Let me put it this way. I believe that there are enough regulatory measures in place to protect people, not as flexible as they should be, because innovation there has been quite some progress in this field of innovation. So there is a regulatory framework that could apply, but needs to be revisited in order to provide the necessary flexibility. What I want to say by that is that they should be treated as securities in case where the regulatory framework is insufficient, significantly insufficient. Now, is it insufficient? Yes, it is, of course, because we have seen that there have been so many ICOs where the value of the tokens now is, let's say, 10 or 100 times less, or even more, than what it was right after the ICO was finished. So it is a concern, yes. There should be regulation that would prevent this from happening in the future. Now, it's a very fine line. What kind of regulation is enough, and how can we have regulation without hindering innovation? I mean, this is a very difficult equation for regulators to solve, and this is why regulation is not readily available.
And what would you do if you had a magic wand that could change global regulation of ICOs? What action would you take to legitimize them, protect investors, and incentivize innovation in the space?
Interesting question. There is one key problem there, that even existing security laws are not uniform or uniformly applicable worldwide. So I don't think that there is one single move that you can do that globally would prevent regulation from hindering ICOs and their growth. What I would definitely do is I would require at least a prototype of a product, not just a white paper, before an ICO issuer can raise more than a threshold, a specific threshold. So I do believe that projects that are at concept stage should be able to raise 100 million to 100 million or billions that other projects have raised. There should be a limit depending on the progress that the project has made in relation to its product. And it could work commensurately.
Okay. And what's your stance on things like ICOs, which is obviously a merger between decentralized autonomous organizations and conventional ICO?
I don't think that they would have much appeal. Why? I can't see how, if I had a great business idea, I would put so many limits to the access I would have to the funds that I manage to raise when it comes to spending them in order to cover my operational expenses. I mean, decentralized ICOs say that I think one of the key concepts are that the decision-making process belongs to every single member of the decentralized, let's say, community. So that in itself is very difficult to implement in practice, and it would hinder the decision-making process of the organization, in my eyes.
So you just don't see it as a practical reality, even though it's a nice philosophical standpoint?
It's a nice philosophical standpoint, but I cannot see how this could translate into something that is viable now.
So we touched on earlier about securities and how they're impacting ICOs. Now there's obviously the cryptocurrency or the ICO death, as some people are describing it. I don't personally agree with that, but that's what you see all over the internet. Some people are saying that STOs could rescue the cryptocurrency market. First of all, would you mind describing an STO, and then could you elaborate on what that means?
So an STO is a security token offering. What it mainly is the tokenization and the floating on the blockchain of a security. That's what it is. So, as a security, it falls within specific regulatory frameworks. Depending on the jurisdiction, that's why I'm using plural. Depending on the jurisdiction where you issue the security, that will then be tokenized, or is tokenized from its birth. Then different regulatory requirements apply. That in itself is another challenge, because ICOs had global appeal. So ICOs managed to attract attention from every single jurisdiction, regardless of whether you issued it from the European Union or the Seychelles or Singapore or wherever. Now STOs have limitations because of that, as any security offering would have. And at the same time, they do provide answers that ICOs fail to answer, like legal certainty. Is the offering legitimate or not? So they could be an answer, but they have many challenges that they need to overcome.
And could you elaborate on what those challenges are?
Sure. One thing is that they are limited on per jurisdiction. So, as I mentioned earlier, the issuer of the ICO must comply, of the STO, must comply with the security regulations of that specific jurisdiction that it is incorporated in. Also, it must comply with the regulatory framework of the jurisdiction from which the investors come from. That's why you have so many security offerings that, let's say, are from Europe, but they exempt investors from the United States, because there are other compliance considerations that are involved from the US jurisdiction. So that in itself is a challenge. ICOs are more flexible. Especially in the beginning, ICO issuers believe that there isn't any kind of regulatory framework for that, other than, let's say, AML and other KYC related frameworks that applied. That in itself hinders, let's say, or prevents STOs to have that rapid success that ICOs did have.
And then I suppose another factor is the lack of infrastructure surrounding STOs at the moment. There's not readily available exchanges that people would turn to.
Just because they're regulated.
Yeah. Do you think that's it? I just thought that there wasn't enough development yet in the space.
It could be both. From my legal and, let's say, compliance eyes, there is a certain gap in regulation of exchanges, because if you're listing a security in an exchange, I mean, the token is a security after all.
Yes.
Regulations do apply. So if this is traded in the secondary market, you need a trader broker license. If it's in a primary exchange traded, as soon as the STO becomes available, is listed on the exchange, and this is how it becomes available to the market, it's similar to an IPO. So I believe that there should be regulations that would apply in that case as well. Of course, depending on the jurisdiction. So there are so many answers that have not yet been answered. You don't have like many test cases that you can use as precedent and say this or that is a safe way to do it. So both issuers and investors are sitting on the fence now waiting to see the first risk takers, that would be the guinea pigs, let's say, of the industry, will do it successfully, and then they will follow suit.
Because I suppose it's all done through precedent, obviously.
Yes.
So the first ones are going to set the precedent, everyone else is going to follow it and see where the clearly defined lines are.
I think yes. I think this would be one way of making people, trust STOs more than they do now. That's one thing. Of course, they are definitely more, let's say, they provide more legal certainty than ICOs. However, they have more strings attached, so it's they are more limited than ICOs.
And also they're a lot more expensive to set up.
Definitely.
Like it must be orders of magnitude more expensive in legal fees.
Yes, there are many regulatory considerations that require legal attention, definitely, and advice. Then you need legal opinions on various things and what kind of a security it is. Then you need to put together documentation for the let's say the subscription agreement, depending on the type of the security. You need to change the articles of association of the company, etc. Please don't take this as legal advice, but this is something that applies in every single jurisdiction that you want to issue a security, more or less. There are changes that need to be made that affect the organizational structure of the company that issues the security, in most cases. So I think that STOs reintroduce the regulatory burden that existed for fundraisers, companies that wanted to raise funds before ICOs came into play.
Is it possible to do an ICO to raise what would be the equivalent of a private sale to then use those funds to do an STO? Pardon?
So you can have like a SAFT agreement or like a pre-sale, token pre-sale agreement, raise some funds, and then let's turn the coin into a security token.
Because what I'm saying is that because the barriers are so high to STOs because of regulatory constraints and lawyer fees, would it be possible to raise money through an ICO and then use that as leverage into an STO market?
I don't see how this bypasses the regulatory requirements.
No.
Because in the end of the day, you will end up doing an STO. So in the end of the day, you will have to comply with the same regulations.
No, I just mean that many people might not be able to afford them without some kind of startup capital, and that startup capital could be derived from an ICO potentially. Yeah,
it could be, but it's always a business decision. Yes, it could be an answer. But if you can raise money through an ICO, then why do an STO after that?
Well, that actually brings me to my next point, which is that I think a big law of STOs is that institutions are much more attracted to them because they're so much more familiar with their conventional financial infrastructure.
In theory, yes.
In theory?
No, they are more conventional, definitely. Yeah. But in theory, there is a theory that institutional investors would be more interested. But we haven't seen that yet. In theory, yes, it sounds that they should be more interested in STOs than ICOs. Because exactly for the reason that they're regulated. That's the main reason. And depending on the jurisdiction, there are many examples of regulations that an STO can be issued within. There are certain examples with the United States, but there are certain limits that do apply. And one example is the various crowdfunding regulations. There's a specific regulation crowdfunding in the US that allows for STOs. It's a good example. Another good example is the UK investment-based crowdfunding as well. It was quite successful, this regulation here, because it allowed certain, let's say, companies to flourish. Not just the issuers, but the intermediary companies that facilitated such crowdfunding through the internet. There are many examples, but until this becomes more mainstream, I don't see how institutional investors would jump onto this and take that risk. For me, something that needs to take place before STOs become a hit is that the tokenization, that the additional features that would come with tokenization will significantly outweigh the security aspects of the STO. What I mean by that is, why tokenize a security if you are to do a security offering? You have institutional investors like VCs that invest in traditional security offerings that are not tokenized. So they need to understand that the benefits of tokenization significantly outweigh the risk potential investors think that they will be undertaking in investing in STOs. So once this becomes evident to them, I think STOs will be successful.
Do you think that they are going to exceed the popularity and success of IPOs?
Of IPOs?
Yeah, eventually, because obviously we're talking about the very infancy of STOs.
So we're talking about replacing IPOs with STOs?
Yeah, do you think that that's a future possibility?
If STOs attract enough attention from institutional investors, then yes, I don't see why not. Because they're quite similar.
Yeah, what would you say is the best, what do you reckon is the best benefit over an IPO to do an STO?
There are ways to conduct an STO that carry a significantly lower regulatory burden than an IPO. There are lesser, professional fees involved, so it's less expensive, definitely. And I think IPOs are limited to very successful candidates, like private companies that have been successful and now they go public. STOs is something different. I think it's for companies that are in the startup stage. They have a successful product, not quite success. It doesn't have to be successful, but they have a product that's promising. But they do have a product. And this can attract seed investors, angel investors, and then VCs, etc. I mean, I think it's for this stage of fundraising rather than later. But they could replace IPOs in the future, yes. As
they evolve. And I was just thinking, would it also be a benefit to investors to have the token representing the ownership in the company in their own private wallet if they want to do so, as opposed to be given, the conventional certificate of ownership? Because I remember in the 2008 crisis, there was a sort of news story. It was an American food company that had oversold their stock by 35 or 40%. And so when people went to go claim their stocks and claim their principal, it wasn't there because they just simply overbought. But you can't do that on the blockchain because obviously everything's recorded and timestamped.
Yeah, this sounds like an advantage, definitely. Additional advantages are liquidity. I think tokens, especially the ones tradable in the secondary markets, are, let's say, more readily liquefiable. So you can, let's say, sell them much quicker than you could sell, let's say, definitely stock in private companies, but even in public companies. I think it's much quicker to do it because there are many, let's say, technologies available that allow that.
Yeah, there's no clearinghouse.
Yes.
There's no, counterparty risk intermediary.
Even if there was such an intermediary, I think the processes would be much faster. They are not. I'm saying that they might come into play with future regulation. Even if they do, though, technology is structured in such a way that would allow that to be faster.
And what I'm also curious about is how hard is it to become how hard are the KYC processes on these securities exchanges to buy into an STO? How hard would it be, for example, for myself to buy into an STO?
That's a good question. I think they shouldn't be harder, and the requirements shouldn't be harder to overcome than what they are now. I think it's the European legislation that applies uniformly on that. So you have the same AML rules that do apply. You have the same KYC requirements. But if the question is from the point of view of the investor, then the same applies. If it's from the company's point of view, I should assume that the same applies. I'm not sure, but I can't say for sure right now, but I should assume that the same applies.
Because I heard
the pattern should be the same.
Yeah, because it was I think it was you that said that in the UK the term is sophisticated investor. Is that right? To pass into a security.
In the US, it's accredited investors.
Yeah, but in the UK, it's sophisticated investor. That's what the definition of for someone who can invest in security.
It depends on the security offering. Anyone can invest in a security.
Yeah,
but it depends on the security offering itself.
Okay.
So let's say a good example is I think it's Regulation D in the US, where you have where you can raise money only from accredited investors, who are, let's say, examples of investors that have a steady income of like $200,000 or more per year, or a net worth of $1 million and more. So it's like a private sale that you can market to the public with this particular limit. So it's not exactly a private sale. Correct what I said. Yeah, it's a bit different. I think that the definition of the similar definition applies here in the UK, but the parameters are different. But this doesn't mean that under a particular offering, the security that's being offered is only accessible by specific people, depending on the type of the offering. So that's how it works.
Because that's what I was wondering. Because obviously the main reason for KYC presumably is a verification of one's nationality to make sure that you're not.
That's one of.
I would have thought that'd be the main one.
It's one of the reasons you conduct KYC, and you want to verify people's identities. First of all, you want to make sure that they're not in a targeted persons list. That's one. The second is that you want to make sure that you're not offering this security to residents and, let's say, citizens of sanctioned countries. Here comes what you said. Another thing that you really need to know is that these people are not politically exposed persons, because otherwise you might be, let's say, facilitating corruption without knowing it. Mm-hmm. There are many reasons why we need to conduct KYC. AML is another. So you need to ascertain the source of the funds to make sure that they're not proceeds of crime and there's no money laundering involved.
What's AML? What does that stand for?
Anti-money laundering. Money laundering regulations,
okay.
Yes. So KYC is a lengthy process. It's very, very important. And this had been recognized from the beginning from ICOs. That's why ICOs started, proactively adopting KYC processes. So in case a regulator or the authorities at a later stage decided that they should increase scrutiny on these offerings, at least they had done KYC to shield themselves from criminal liability.
Because that's what I'm most curious about, because if all these great projects are going to turn to STOs for investments, I want to know how hard it would be for me to get in, because my perception, which might be a misperception, is that it's very, very difficult.
No, actually, I don't think it is. No,
it is. That's very good to know.
Yeah, I think it's more difficult to set up a bank account.
Oh, really?
Yeah, it is a little bit more difficult, if not the same.
Alright, perfect. What I was hoping to talk about, just because it popped into my mind, is while I've got you here as a...
Unless you need to be an accredited investor. To add to my previous...
is that
unless you need to be... unless it's a Regulation D offering in the United States, and you need to be an accredited investor.
And that's all within the terms...
But again, you would need to be in the United States.
But that's all within the terms of the STO themselves when setting out. That's not something imposed on them.
No, it's something that you would definitely see in the terms and conditions of the STO before you invest. So it's not something that you should go, by yourself and investigate. Yeah. You should definitely read very well the terms and conditions of the security token offering and act accordingly. Okay. And then get legal advice that might help you in investing, depending on how much you want.
This is not legal advice.
This is not legal advice at all. No.
No, it's just interesting, and that's what I wanted to pick your brain on, because it's good to get clarity in these particular matters. I was wondering if you could elaborate on the legal background of the ETFs that have been arising recently. I'm just wondering if you could elaborate on them for me, because obviously ETF, exchange traded fund, there's a lot of people that think that this is going to be a resurrection for the cryptocurrency community, because it's going to open up institutional channels and money, and it's all going to flow in, but they're being stopped at the door by the regulators.
Yes.
So can you explain what an ETF is and why regulators aren't happy with how they're being structured?
The simplest way I can put it is as follows. You have a fund, and this fund invests in multiple securities, like, let's say, traded in NASDAQ. They invest in Apple, they invest in, I think Apple is in NASDAQ, if I'm not, correct if I'm wrong. But anyway, you can invest in multiple securities, right? In stock of various public listed companies. So you create a portfolio. And then what you do is that portfolio is owned by the fund, so you do an IPO of the fund. So now it's the fund's stock that is traded in the stock exchange. So whoever invests in you indirectly invests in the portfolio that you hold, indirectly investing all the companies that you hold stock in. So how would this work in the crypto world? You have one fund that invests in crypto, and then that fund does an IPO, and then you have the shares of that particular fund traded in the stock exchange. So investors in the fund indirectly invest in the underlying value of the fund, which is its portfolio, therefore cryptocurrency. But at the same time, cryptocurrencies are traded in unregulated markets, which are open for abuse. They are open for manipulation, and they don't protect investors. They don't have the measures in place that would protect the market. Therefore, despite the fact that in the primary investment, which is the equity of the fund, the stock of the fund traded in the exchange, there is protection. There is no protection that would guarantee the same in cryptocurrencies. That's one of the main reasons, in my opinion, that these applications are not yet accepted.
Yeah, I suppose it's also not necessarily a good thing for the space if these do get approved, because once the IPO would have, in your example, you say an IPO of a fund, once that enters the financial markets, no doubt that's going to lead to a whole host of other financial assets surrounding it. And what could happen there is an abstraction of the Bitcoin price, and instead of having the Bitcoin price found through supply and demand on the actual Bitcoin marketplace itself, it might be discovered through the secondary, third and fourth place financial markets. And it gets away from the true underlying supply and demand of the asset, and that could lead to distortion and potentially lead to damage in the crypto market.
I believe that the crypto market has yet to address all its issues. I don't say that it has to solve every single problem associated with the crypto industry before it becomes mainstream, but there are certain steps that need to be taken that would, let's say, limit volatility, prevent market abuse and manipulation. And once those steps are taken, I do believe that then regulators will see the industry from a different perspective, and all these things that we have been discussing so far in this interview will be part of the history.
Tassos, thank you very much for coming on the show.
I
very much enjoyed it.
It was a pleasure.
It was a pleasure.
Thanks for watching.